Morning, Josh Hayes here with Hedge Plus. This is the market monitor for Wednesday, October 15th. Came in to the office this morning and pretty much every day this week, thinking there wouldn't be too much going on. But unfortunately, it seems like every day overnight, we learn more about escalating tensions with China. And it definitely seems as though things are taking a turn for the worse. The latest is the statements coming from President Trump that seem as though there's a less optimism for China ever buying soybeans from us. And in fact, it seems as though some of our trade priorities are shifting. And instead of this potential coming meeting with President Xi being about what was originally supposed to be about soybeans, and the airplane manufacturer Boeing shifted off into priorities with rare earth minerals, port fees, and some conciliatory statements from Trump indicating that it just seems like he wants to shift his focus. So taking a look at what we're waiting right now, we have Trump's statements implying he's not optimistic China will be buying U.S. soybeans and perhaps even lowering it on his agenda. We are already at a point where export inspections for soybeans are down 26% from last year. The USDA anticipated some decrease due to a lack of purchases from China, but only had that projected down around 10%. If no deal gets done anytime soon, or if soybeans wind up being very little part of the deal, I think you will see the UST adjust that forecast down even more. On the other side of the equation, it is getting a little too dry in parts of central and northwestern Brazil. They had good rain coming into their season, but it has now been weeks in many places without rain. And that is already beginning to lead to some replanting of soybeans. There is also a building chance of La Nina. It's a matter of how severe or how strong that La Nina will be, but it's something to watch for. Early stages, it's not impacting the market too much right now, but it's definitely something that could hit soon if the conditions don't improve there and they don't start getting rain. It does seem to be a little bit better in Argentina. The one thing we've got going positive for us, it's not really reflected in prices, which is a reason why you have to expect that this is a lot more to do with harvest pressure right now. But corn inspections are up 65% versus last year. Wheat inspections are outpacing last year's totals by 18.1%. We are still getting weekly export inspection reports. Thank goodness, because they are showing that we are getting corn and wheat sold. And we'll look at that here in a moment where we stand with international prices, but there's no reason to expect or to think that corn or wheat sales are going to slow down anytime soon. Shifting gears to weather, warmer than normal temps end this month. Parts of the Midwest are getting rain right now, slowing down the harvest a little bit, but overall, pretty good weather for harvest and also pretty good weather for winter wheat planting. In Brazil and Argentina, our weekly update there, it is becoming a concern over dryness in good parts of Brazil. Argentina is still set to receive good conditions for the next 2 weeks, but as the La Nina builds, some of Brazil's weather is anticipated to become problematic down the line in Argentina as well. Just not quite as far along as they are in Brazil with some of their dry weather. In China, excess rain in the largest corn and wheat area is raising concerns as they harvest that they might not be able to get the crop out before too much damage is done. Something to watch there as well. Taking a look at international prices, we've got, you can see U.S. prices are now lowest across the board for corn and soybeans, near lowest for wheat. These price declines that we've seen in the past week in the market have definitely taken their toll And now we obviously have the cheapest corn, the cheapest beans, and we nearly caught what's coming out of Baltic states for price with wheat. That it does suggest some level of support here, that we would hopefully not go too much more lower. But unfortunately, it's not too large of a gap from say Argentina on corn, Argentina with soybeans, and multiple places, including Russia and Ukraine, for wheat. So while we are the lowest, we're not the lowest by such a great amount that you would expect this to be to any kind of rally. Again, we are under harvest pressure, but looking at this, the best thing you could probably say is that we probably won't go too much lower. That said, taking a look at overnight prices as of 5:50 this morning, down again across the board. Not too much to get excited about, not too much to spark a rally. If we're going to get any kind of bounce, it'll probably be technical bounces as we hit support levels. We bounced a little bit off of 5-year lows from yesterday with wheat. Soybeans trying to hold on above $10, and corn is been trading in the range just a little bit above this, so we definitely want to see if we can hold here. But we've said all along that there was still a good chance to go down all the way as low as $4, if not, $3.90. Relative to this time last week, last market monitor was on Thursday. So from 6 days ago, corn is down another 10 cents, soybeans down another 24 cents, and wheat down another 12. As far as the outlook going forward here, we think we're probably past the peak of harvest pressure with soybeans, probably right in the midst of it, if not just prior to it with corn. Outlook for wheat, while we have very competitive prices and our export pace continues strong, the countries we're going up against keep lowering their prices and keep raising their export totals themselves. So there's a lot of pressure there. Hopefully, there will be some meeting of the minds between the U.S. and China to at least still strike some kind of deal, and hopefully it does still include soybeans. That's all for this week. Hope everyone is having a good harvest. Everyone's staying safe out there, and we'll talk to you again next week.